So, so today, right, guys? Here, let me go ahead and go over to my YouTube real quick to make sure everything's looking good. One sec. Okay, live right here. Okay, so for everyone joining, welcome. First off, welcome everyone. Right? So today, right? Today we ended up catching a 600. You guys are hearing me right? 650 point trade. For those that speak Spanish, 650. Alright? 650. Right? Guys, what I'm about to explain in this class for the people watching the recording, for people that's watching the stream, for the people that are in the Discord, guys, it can't get any better than this. Yeah, I literally had to. I had to, right? So, guys, the class today, it cannot get any better than this. And for those watching the recording, rewind if you guys have to, right? So let's get started, right? And everyone joining, welcome. I'm seeing a lot of you guys join, welcome, right? So let's get started, right? So let me show you guys literally. Wait, let me go ahead and move this over right here. Let me show you guys every single bit of detail behind my strategy, what I used to read this, what I used to catch this, and exactly how I found this setup. It can't get anything. I mean, it can't get any easier, right? So let's get started. Right here, let me share my entire screen so you guys can see this. And on my stream, of course, go over here, right? Bro, Brizzy, thank you, bro. But okay, all right, guys. So let's get started. First, to start off, before we do anything, I'm gonna show you guys the exact alert from where we entered, where we re-entered, and exactly where we took profit. Right? Let's start there. After we start from there, I'm gonna show you guys exactly my strategy from A to Z. No steps missed, no nothing. Right? Then I'm going to explain to you guys the... hold on, let me drink some water. Hold on. I'm going to show you guys the real-time trade on where I entered and how it went. Right? What's good? What's up, everyone joining? What's up? Right? I hope you guys are having a blessed day, because I for sure am. Right? I'm super hyped. I for sure broke my history in my trading history. I've never had such a big day like this. So if you guys hear me energized, you guys know why. All right, so let's get started. Let me stop talking so much. Anyways, so you guys can see my entire screen. So let me go ahead and go over to the alert channel to show you guys everything right here. So of course, to start off, you guys can see 650 points. I'm gonna keep saying this number, right? Because I've never expected this number ever in my life, but here we are today explaining this trade, right? So 650 point trade, right? How did I do it exactly, and how did I give it to you guys so everyone can make money? Well, let me go ahead and show you guys, right? So here, first of all, let me close this. Okay, so let me go to the complete top of this. Actually, matter of fact, before I explain this, let me show you guys the chart, or my strategy, right? Because I'm sure that's why you guys are here and all that good stuff, right? So to start off, what strategy did I use? Congrats, thank you, man, thank you. And of course, I'm gonna show you guys everything from A to Z. I'm not hiding anything. I do not care. I don't need a dime. I don't need a penny. I don't need anything from you guys. I just want you guys to learn and pay attention, right? So let's get started, right? What is the first thing we're gonna cover? Well, pretty much the strategy that I use behind this trade and behind practically almost all my trades, which consist of drawn liquidity, MSS, fair value gaps, and inverse fair value gaps. That's simple. 4 stuff, right? So here's what we're gonna do, right? Let me explain to you guys my strategy. So what I'm gonna name it is, of course, the Blastoise. For those that know my actual name, or my trading name, the Blastoise strategy. That's what it's called, right? Let's go ahead and name it the Blastoise strategy. Blastoise strategy, right? Okay. Let me make this a little bit readable. Okay. So let me put this in the corner. Here's what we're gonna do. Right, so what my strategy consists of, right? Let's go ahead and put it right here. Consists, how do you spell consists? I think it's like this. Of, it's the trend. We need to, the first thing we always need to identify, yes, it is being recorded. And for the people watching, rewind this a million times if you have to. I don't care if this class is 1 hour, 2 hours, or even 12 hours long. Pay attention, because it literally can't, I promise you guys, it cannot get easier than this. Right? Okay, so the first thing we want to be able to identify in the strategy is going to be the trend, right? Of course, you need to play with the trend. If there's no trend, there's no trade, right? No trend, no trade. Okay, so I'm going to write this down. No trend equals no trade. That's simple, right? Okay. Now, the second thing that we need in the market is draw on liquidity, which I will show you guys exactly how to find right now, right? So the second thing is going to be number 2, of course, DOL. Very important. Everything is important, pretty much, right? Once you guys know the trend and know the draw liquidity, which I'm going to show you guys right now, right? You guys need to be able to identify the MSS in the market, which lines up with the trend in the market, which I'll show you guys right now. So what does MSS stand for? Market Structure Shift. Okay, and I misspelled that. Hold up. Okay, and DOL stands for Draw on Liquidity, right? Okay, now that we know this, right? The final step. What's up, M2? What's going on, guys? The final step to my strategy that I use every day. You guys see the wins. You guys see everything. You guys see the results, the wins, whatever. The final thing you need is the entry point, which will be the fair value gap, which I'm going to show you guys how to do right now, right? You guys need to pay attention to this. I see 90 people in here. I do not want to see anything less than 90 people in a few minutes, right? Okay, number 4, fair value gaps and IFVG, which I will explain right now, right? I love the energy. Thank you, bro. Thank you. And I saw the number go down to 89, so it's whatever. I don't really care, right? Okay, so my strategy consists of the trend, which of course we need in the market, right? It consists of drawn liquidity, which I'll show you guys what it is right now, right? MSS, which is the trend in the market when it's flipping left and right, and of course your entry model, which will be the fair value gap, which I'm going to show you guys exactly right now how to find, right? Okay, and I'm going to run out of water really soon. So now we know exactly, oh, it's too small. Okay, now that we know exactly what this strategy consists of, right? We need to be able to identify every single thing. Good afternoon, Snaps. Good afternoon to you, bro. All right, so the first thing we need to be able to identify is the trend in the market. So let me show you guys exactly right now how to find it. Right now, to find the trend in the market, which I'm going to write down right here. Right, so number 1, which I don't know why I keep putting this right here. So number 1, right, finding the trend in the market. Right, how do you pretty much find the trend? Well, it consists of 2 things. Right, it consists of 2 things. Right. Number 1 being the higher high and higher low, which I'm sure you guys have probably heard of, which is very common in the trading space, right? So we have the higher high and higher low, which I will show you guys exactly how to use it, what it is, and so on, right? And the second thing being, of course, the lower high and lower low, right? Okay, now by looking at whatever market, right, you guys need to be able to identify the trend. If not, you guys can't trade it, right? Because of course you're going to play against the trend. So here's what we're going to do, right? Let's say, for example, right, the market is in an uptrend. Of course, I'm sure you guys have some sort of common sense, right? A bullish trend does not mean the market is only going up, green, 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 green. No, it means that the market is steadily going up, right? Same thing with the downtrend, right? So let me show you guys right here, right? So for example, right, this, which I'm going to label as number 1, right? This is an uptrend, right? Why is it an uptrend? Because as time goes on, right, the market is going up. It's going higher and higher and higher, right? Okay, now, what is a downtrend? It's really easy. Well, a downtrend actually looks like this, right? The market goes down, it pulls up, goes down, pulls up. As long as the market over time is going down, right, that is a downtrend. That's simple. Okay, so now that we're able to identify, here, hold on, let me go ahead and rewrite this. This is a downtrend. And for everyone on my YouTube, thank you for the congratulations on the trade. Just make sure you guys are paying attention, right? Because it's going to be really, really important, right? So this is a downtrend. Really, really simple, right? So now we know what the first thing is in the strategy, which is by far the easiest thing, right? Which is going to be the trend, right? Let's go ahead and put like a little check mark there, right? Because of course, you know, to be a little bit organized, right? So we know exactly what the trend is in the market, which looks like this, right? Okay, let me see. Bro, what the hell, Kurt? Oh, okay. Anyways, right? So now we know exactly what the trend is. Could be an uptrend, could be a downtrend. We need to be able to identify what drawn liquidity is and exactly how to find it. How do we do that? Well, let me show you guys, right? So we need to understand what the meaning let me see, particular time frame. No, I'll explain in a second, right? But anyways, to find pretty much the meaning behind drawn liquidity is you guys need to be able to understand what stop losses are in the market, right? If you guys don't know what stop losses are, when you guys place a stop loss in the market, which I'll write down right now, right? So I'm gonna put like right here as like the little notes tab. I'm gonna put like in the corner. Number 2, right? So drawn liquidity. What is DOL? Is open. Okay, stop losses, right? So what this means is, okay, let's say for example the market trend is bullish, right? If the market trend is bullish, of course, people are going to be going, or they're going to consider going into longs, right? Of course, they're going to be playing with the trend. If the market's going up, it makes no sense to go against the trend, right? So what's going to end up happening is people are going to start going into longs, placing their calls. You know, if you're doing options, could be longs. If you're doing futures, and so on, right? So what you're going to do in this case, for example, right? Let's say that the market is steadily going up. You can see it right here. We're breaking new highs. You know, we're not going any lower, and so on, right? So right here, let's say for example, you want to go ahead and take longs right here, as the current pattern or the current trend in the market is, you know, it's only going up. So what you're gonna do is you're gonna place longs, and ideally, let me ask you. Matter of fact, let me ask you guys in the chat, right? How many of you guys, or where would you guys place your stop loss right here where the trade is? Right, in this trend, where would you guys place your stop loss? Let me see. And for my YouTube, you guys can type it as well. Below the low, at the, okay, exactly. So you guys know where the stop loss will be at the most recent pullback, right? It makes the most sense. Why is it at the most recent pullback? Main reason being is because the most recent pullback is the most recent level where the market bounced from. Meaning at that exact level, right? I'm gonna say it in super simple terms, right, guys? At that exact level is where everyone, not everyone, but a lot of buyers stepped up to make the market bounce up, right? Which is why the market went up. Now, before I keep going, real quick, if you guys want the recording to this class and all that good stuff, here, feel free to subscribe to the YouTube. You know, like a quick little plug. But yeah, it's there if you guys do want to get the recording. But anyways, that was a quick plug. Anyways, so yeah, as you guys said, right? Your stop loss will be set at the most recent low, which in this case will be right here. So let me go ahead and put this level right there, right? So let me go ahead and do like let me see, like a trend line, right here, right? So your stop loss will be at this line right here, right, where the market bounced from, right? So what we're gonna do in this case is people set, let's say for example, people buy their longs right here, right, and they set their stop loss at the most recent low. What ends up happening is every single person that placed their order, their stop loss at this level, it creates liquidity. The stronger the level, the more bounces the level has, the more liquidity there is. Why is that? Well, because of course, the more respected a level is, the more trust people have behind the level, right? So a lot of people think that the market will keep bouncing above this level, meaning if the market goes below this level, right, it could be any level. For example, we're going to be using this one. That means that the market will go ahead and fill your stop loss, meaning it will sell your order and give it to someone else, right? What that creates in the market is liquidity, and I don't think I can word it any better, right? This is the easiest way I can pretty much word it, right? So this is how it's going to look like, right? You enter longs right here and you set your stop loss at the most recent low, right? And this is how it looks like. Now, this low right here, which I'm going to go ahead and point at, this low is going to be known as drawn liquidity, right? Now, there is no secret to finding drawn liquidity, and you can find millions of levels right now that are drawn liquidity, right? But since we're day traders and scalpers, right, as many of you guys know, right, we are going to mark out the most recent ones, as that's where price is likely set to go to, right? So the way this is going to look like is, of course, we have the most recent drawn liquidity. We have one right here, which I'm going to go ahead and put right here, right? We have the most, not the most recent low, but we have a low here. We have another one right here, and so on, right? So every single one of these levels is going to be known as drawn liquidity. Same thing goes with the downtrend, but instead of marking out the lows, you're going to be marking out the highs, right? Is that easy, right? Drawn liquidity is a secret formula to the Krabby Patty. Exactly. You guys, it's a need. You guys, if you guys want to master my strategy and all that good stuff, you guys need to understand drawn liquidity, and it's so easy. It's literally finding support and resistance levels. That's all it is, right? So in a downtrend, same case goes, right? If the market is going down, you're going to be looking for shorts. Depending on wherever you want to enter, you set your stop loss up here, and so on, right? The trade goes on, right? So every single level that you're going to go ahead and mark out right here is going to be known as drawn liquidity, right? It's that, guys. Even a 5-year-old can understand this, right? It literally can't get any more simple, right? So let me go ahead and place all of this just like that, right? So this is going to be drawn liquidity. It's that simple, guys, right? Okay, so now that we know exactly what drawn liquidity is, we're just marking out the lows or the highs where the market either bounced or rejected from. We know exactly where it is, right? So we're going to go ahead and put a check mark right here, right? So let me go ahead. Let me see if I can even do it right here. Bro, TradingView's playing games, bro. Okay. Okay, hold up. Hold up, hold up, hold up, hold up, hold up, hold up. Hold up, hold up. Let me do this correctly, because this thing is not letting me grab. Okay, there we go. Okay, so now that we know what trend is, we know exactly what drawn liquidity is. What do we need to understand now? Well, before we move on to MSS model, we need to understand the concept of the banks, right? Keep in mind, it's not guaranteed, but it's a big concept. Now, let me kind of explain this as easy as I can. And of course, for those watching the YouTube, if you guys are like rewinding it, and no, guys, I do not control the market. I know, some people say that. Space is probably saying that. So I don't control the market. I just know how to read it, right? So here's what we're gonna do. Right? So before we go on to step number 3 of the strategy, out of four steps, right? We need to understand how the banks move the market. You guys know our little $100 trades. They're not gonna make a single decimal in the market. They're not gonna move the market by a decimal. You know what I mean? So our trades don't mean practically anything in the market. What matters is the banks trading billions upon billions of dollars a day, right? And it's not a person trading this, it's not an actual person trading with billions. It's an algorithm, right? Yeah, you're pretty much a small fry, exactly. So what I mean by this is, okay, so you guys know how the market consists of it's pretty much numbers. It's a numbers game, right? The market is literally a numbers game, right? So of course, you guys know banks, they for sure have an advantage in the market. It's not guaranteed, but it is a big concept which I trade, right? So the concept goes, and you guys need to understand this, right? The concept goes, the algorithms, which is a robot in the market, right? It's able to read numbers in the market, right? What numbers does it read? Well, it actually reads liquidity in the market. So for example, right? Let's say that the market is currently going up, right? In an uptrend, right? And in every single pullback that the market has, all of us are placing our, yes, it will be recorded. If you want my YouTube channel, here it is. Hold on. Okay, here it is. And this goes for everyone in here, right? Okay, so when the market is in an uptrend, right, and we're setting all of our stop losses at every single low that the market has, right, we're placing an order, meaning if the market goes down into that level, we're going to sell our order to someone else. You guys know the market consists of buying and selling. You can't sell to thin air. You know what I mean? Someone has to buy those contracts, right? Who's the one that buys those contracts? Well, it's actually the banks or the algorithm that places billions of dollars into these orders. Now, let me give you guys the best example I could possibly give you. If the market is pumping up 100, 200, 300 points, right? Banks, they're not going to be buying at the complete top. That is the stupidest thing possible, right? You guys know how pretty much everyone says the market is made to be against you, right? So what ends up happening is if banks have billions of dollars to easily manipulate and move the market, what ends up happening is instead of them buying at the complete top, they're going to buy at the complete bottom. But how do we know how to time the complete bottom? Well, the algorithm, since like I said, it's a numbers game, the algorithm is able to read all the numbers in every single level of liquidity. It's able to see how many orders, or the concept goes, it's able to see how many orders is set at a certain level. If it's enough for it to be, free money pretty much, it's going to manipulate the market to go down into those levels, right? Once your stop loss gets hit, your broker or the market, right, is going to sell your order to the algorithm, right? So those banks are buying at the complete bottom and they're buying it from your orders, right? Once it's filled, every single order, which is known as a liquidity sweep, right? It sweeps every single order nearby, right? And what's it called? Yeah, it sweeps every order nearby, and once the banks filled all the orders, right, and it's a complete bottom, the market goes back up, right? So if I ask you guys right now, right, for the 95 people in here, and for the 20 people on the YouTube, if I ask you guys right now, how many times have you guys placed a stop loss at a certain level, right? And hear me out. The second you place your stop loss, it hits, of course, it hits your stop loss and it goes right back into your direction and it hits your PT. How many times has that happened? Because I've been trading for 4 years, like Zero said. Yeah, I've been trading for 4 years. Guys, I've been stopped out to the tick a million times, right? And the reason this happens is because I'm sure you guys have heard of the term, you're my liquidity, right? we're the bank's liquidity. So instead of us trading with the other retail traders that are getting swept by the banks, right? You guys should be trading with the banks. And what's my YouTube? Here it is. Here it is. Right? Instead of trading with the retail traders and getting stopped out, you guys should be trading with the banks and making the money. Right? So, like I said, right? It's a buying. Where there's a seller, which is us, there's gonna be a buyer, which is where the liquidity sweep concept comes in. Right? So here's what we're gonna do. Right? Now that we know exactly how the banks move the market, right? Oh yeah, I mean, of course, yeah, no, banks, they lose money too. It's not 100%, right? There's like a million banks out there, right? So they're constantly competing with each other. But anyways, right? So what ends up happening is you guys might be familiar. Let's say, for example, we're in a current uptrend, right? And for example, you buy longs wherever, and you get stopped out, right? You get stopped out by a few points or by a few dollars, and out of nowhere, the trade ends up reversing and going like this. So it would look like this, for example, right? Why is that? Well, because the bank, of course, it found a level that it wants to trade out, or the algorithm. Let me say the algorithm, right? It found a level that it wants to go ahead and sweep. So it manipulates the market to dump straight down into that level. It's not even like a small candle. No, I'm sure you guys have sometimes have entered a trade, and out of nowhere, you just see the biggest candle out of nowhere, straight into your stop loss the second you enter. Why? Because it's sweeping liquidity. So what ends up happening here is, like I said, DOL stands for draw on liquidity, right? So where is the draw in the market? Well, the draw will be right here. The draw is right here, right? So think of these levels of liquidity as a simple magnet concept. It's so simple, right? So every single high or every single low that the market creates, think of it as a magnet. Eventually, the market will take out that level since there is liquidity in that level, right? And this happens every single minute of the day, which is why this strategy works every single day. I'm sure you guys have seen the win rate, right? So what ends up happening here, right, is we have a magnet here, right? I'm gonna make this a little bit bigger. Okay, we have a magnet here. Let me see, hold up. Magnet here. We have another one here. And you guys get the idea, right? So we have 4 magnets as we have 4 levels of liquidity, right? What broker do I use? I use Tradevate. For everyone asking, I use Tradevate. I trade futures, right? So it'll be this. Okay, so now that we know that each and every single one of these levels are liquidity, right? When the market goes down into this level, there is this slight chance of an MSS model. Now, here's where step 3 in the strategy comes in, right? What does MSS stand for? It stands for market structure shift. Now, I know for some people, I'm sure you guys are probably completely new to trading and you guys don't even know what a candle is, right? So let me simplify for you, right? What market structure shift means in simple terms is if the market is going up, it's simply just flipping to the downside, right? If the market is going down, it's simply going to be flipping to the upside, right? However, taxes for trading, just set aside 30%. That's what I do, right? So what an MSS model is, it's simply just the trend in the market or the direction in the market flipping to the opposite side, right? So why do we need to know this? Well, let me show you guys. Like I said, like literally a minute ago, right? How many times have you guys been stopped out and then the trade goes your way, right? What ended up happening is the trend flipped to your stop loss. So for example, if you're in longs, the trend will flip into your stop loss, meaning it will go into bearish, right? From bullish to bearish, right? And it will stop you out, right? When it stops everyone out and we all sell our orders to the algorithm, right? It's going to go ahead and flip that trend from being bearish to, which is where you guys got stopped out, which is right here, right? To going back bullish. This right here is known as an MSS, right? A market structure shift. It's that simple, guys. Can't get any easier. I promise you guys, a 5-year-old can understand this, right? So now we know exactly what the MSS, what trend, what DOL and MSS is. Can I see your cursor? I think you guys see it. Yeah, you guys can see it. It's right here. Yeah. Okay. So I'm gonna put like a little check mark right here because we know exactly what MSS is. Right now, the final thing to this strategy, the cherry on top, right? It's so simple, right? It's gonna be a fair value gap. Now, there's a little bit to break down here in the fair value gap, which I'll break down right now. It shouldn't take any more than 10 minutes, right? So now we know exactly what the market is doing by reading drawn liquidity and MSS, and of course the trend, right? We need to be able to know exactly where to enter and what to target, right? So here I'm gonna do it in order, right? We need to know exactly what a fair value gap is. What is a fair value gap? It's pretty much a big space where there's, a huge candle, for example, right? In that huge candle, since there's so much volume, some orders just didn't get filled, right? And of course, if some orders didn't get filled, the market usually tends to retrace into that fair value gap, fill the orders, and go back up. right? With candles, what does drawn liquidity look like? Let me show you, right? So drawn liquidity, just like this. I have a million levels marked out. I should have cleaned my chart. But for example, let's go ahead and say right here, right? The market is in a current downtrend, right? So let me go ahead and use the replay feature right here, just for this example, right? Right here, you guys can see that the current market trend is bearish. Why is it bearish? Because the market is creating higher lows, or lower highs, my bad, right? What is a lower high? Well, you guys see we have the highest one right here. We have a new high which never broke the previous one, and we have another high which never broke the previous one, meaning that the market trend is currently bearish, right? So when you guys are trying to find a drawn liquidity, you're simply just going to be marking out the highest points in a bearish market, right? The highest points where the market rejected from, which in this case will be at 717, 692, and of course 662, right? These three levels are drawn liquidity, and like I said, right guys, like I said, there's millions and millions of levels of liquidity, right? It could be on Tesla, could be on Nvidia, NQ, ES, SPY, QQQ, every single chart that you can possibly think of. Anything that has buyers or sellers, there is liquidity in that stock, right? So yeah, and for those, before you guys ask, yes, this works for crypto, yes, the strategy works for Forex, stocks, options, futures, and so on, right? So yeah, this is exactly what drawn liquidity is for the person that was asking what the candles look like, right? And I can give you a million other more examples like this if I can find them, right? You guys see right here, downtrend, every single high that the market has, you're just simply going to mark it out as a level. There's liquidity here, 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 and here, and so on, right? You could do this and, you know, knock yourself out with it, right? But you guys get the idea, right? So let's go back into the chart that I was pretty much explaining, which I really hope didn't get deleted. Let me try to find it. Okay, right. Oh my, hold up. As I figured, yeah. Okay, let me see. Okay, I think I got it there. There we go. Okay, so now you guys get the idea on what drawn liquidity is, like real time, right? So now, how do we find a fair value gap? Well, it's really simple. So if you guys want here, I'm gonna screenshot this for you guys just in case you guys do want the picture. Here it is, right? Because I'm gonna delete this, right? I'm gonna go ahead and delete this, right? So let me go ahead and just delete all of this because it's not really too important, right? Here, let me go ahead and copy this actually. Okay, right? So back to the strategy, right? Now we need to be able to identify the fair value gap, right? Which is very important. So we're gonna type here FEG slash IFEG. And 1 second, let me get water. Hold up. Okay, I'm back. Right? So how does a fair value gap look like in a real chart? First of all, I'm going to give you guys a drawn example so you guys can see the most perfect example. I'm going to give you guys a real-time example from today, from the trade that we took to catch 650 points. Alright guys, so let's get started, right? So what is a fair value gap? Well, let me explain it to you guys, right? Of course, you guys need to know the meaning. So a fair value gap, is an imbalance in the market. In simple terms, it's pretty much, how can I word this, right? It's pretty much when of a candle where some orders didn't get filled, right? So if some orders didn't get filled, what ends up happening is when the market tends, how do I type this? Okay, there we go, right? So what is a fair value gap, right? Like I said, it's an imbalance in the market, right? So like I said, in simple terms, it's pretty much when there's so much buying or so much selling going into one candle where some orders just don't get filled, right? And of course, that's money lying in the market. What is money lying in the market? Well, it's free liquidity to the banks, right? So what ends up happening is the market pulls down into this range where the orders didn't get filled, right? And when it fills these orders, and you know, of course, the banks are good with their orders, they're gonna continue making the market go in the direction. It could be to the upside or it could be to the downside, right? So this is what fair value gaps mean. Now, let me show you guys the perfect drawing to what it looks like, right? And there's some rules that I want to go ahead and show you guys, right? Which I think I'm going to show you guys right after, right? Yeah, it'll make sense if I show it right after. Okay, so I'll make this a little bit like this, like 32. Okay, right? So how does this look like? Well, give me a second. Let me go ahead and kind of draw it for you guys and show you exactly how it looks like, right? So like I said, you guys need to be able to identify what the trend is in the market. How do you find the trend in the market? Well, you simply just have to find what's it called? I mean, you just have to look at if the market's going up or down, right? So let's say, for example, the market trend is currently a bullish trend, right? So the background is going to be blue. I mean, it's going to be green, right? So the candles look like this, right? Well, like whatever, we're going up, and out of nowhere, you know, the candles look pretty normal, right? And out of nowhere, you see this huge candle, right? So how is that candle gonna look like? Well, out of nowhere, you're gonna get this super big candle, right? Best way I can explain it, right? Your head is blocking it, bro. My big ass head. Okay, hold up. For the stream, there we go. My bad. Okay, there you go. Let me put this right here. Yeah, because I have my face cam huge on the stream, so I gotta change that, right? So what ends up happening right here, right? Well, let me go ahead and do this. Okay, so you guys see how there's a huge gap in this range. You might be asking, well, there's no gap here, right? There's just candles. Well, there's kind of, think of it as like an invisible order gap, right? There's volume that has not been filled as this candle was so big, right? So what you're gonna end up doing here is you're gonna go ahead and mark out in a bullish trend, right? Does anyone here trade with funded or personal? It's more funded and I don't know. It's kind of like mixed, right? But okay, so in a bullish trend, right? And of course, you guys need to be paying attention here, right? In a bullish trend, you guys will be marking out the high of the first candle and the low of the third candle, which will give you a kind of like a rectangle that looks like this, right? And then of course you're gonna have your midpoint, right? How do you find your midpoint? It's really easy, guys. Let me show you. So when you guys are marking out your fair value gap in real time, we're at the wick, by the way. Fern, it'll be at the wick, not the body, right? So for example, if this candle has a wick, you're gonna be marking out the top wick, right? So yeah, the top wick of the first candle and the bottom wick of the third candle. Yo, David, how long can the first and the third candle wick be into the middle of the fair value gap to be valid? Okay, there's no certain number. Just make sure that there's a good gap right there with some breathing room. You know what I mean? Like if the gap is like the size of your fingernail or whatever, don't trade it, right? If the gap is like the size of your hand, then that'll be a valid gap. You know what I mean? And I'll show you some examples. Don't worry, right? So how do you find the midpoint in a fair value gap, right? It's really easy, right? So I'm sure you guys know what TradingView is, or TradingView, my bad. I'm sure you guys know. I'm sure everyone in here uses TradingView, right? So what you guys are gonna do is you're gonna click on the brush, right? You're gonna go ahead and click on rectangle. When you guys click on rectangle, just place it anywhere in the chart. It doesn't matter, right? Once you guys place it, go ahead and double click it, right? Once you guys double clicked it, go ahead and go over to style, right? You could have whatever color you guys want. I do not care, right? That's your preference, right? What you're going to click on is middle line. What this does is it simply just marks out the midpoint of that rectangle depending on how big you made it, right? Of course, as you expand it, the midpoint is going to be moving along, right? So you guys see the middle line right here, right? This is going to be your ideal entry point when looking for fair value gaps, right? So the way this is going to look like will be like this, right? So let's say, for example, your midpoint will look like this, right? So you have the top, you have the bottom, and you have the midpoint, right? He's explaining this simple for you to not understand, bro. Yeah, if you guys can't understand this, just keep watching it. I mean, I'm not gonna insult you guys. You know what I mean? It takes time, but you guys get what I'm saying, right? It's pretty simple, like as it goes on, right? Anyways, so when there's a candle that looks bigger than the rest, and by the way, for those that don't know how to kind of guarantee if a candle is a valid fair value gap, let me give you guys a little cheat code here, right? So I'm gonna type here like a little fair value gap cheat code that can really help you guys out, and you know it's helped me and a lot of my members out, right? So what you're gonna do here is I'm gonna type here a fair value gap cheat code, right? You know, like it's something to really look for, right? So I'm sure this will be on my YouTube. Yes, sir, will. Here. I'm gonna keep plugging my YouTube so I can get some, you know, if you guys want to show some love, it'll feel really good for me and all that good stuff, right? So yeah, okay. So in this case, right, I'm sure most of you guys that learn my strategy or trade my strategy, I'm sure like 99% of you guys or 90% of you guys trade futures, right? So when you guys are trading futures, you guys will be trading NQ or ES, right? So on NQ, right, how do you know if the fair value gap is going to be a valid fair value gap? Super simple, right? So when you guys are trading NQ, right, you guys will be looking for, right, you guys will be looking for a 40-point candle, right? So 40 plus points. Anything more than that, the more the merrier. You know what they say, like the more the better, pretty much, right? 40 points minimum. Anything more, the better, right? Of course, the more volume there is to a candle, what's it called? The more volume there is to a candle, pretty much the more orders there is to be filled, right? So the stronger the fair value gap will be, right? And that's why I tell you guys the higher the time frame, the better, right? Because of course, in the higher time frames, the candles will be, you know what I mean? It'll be a lot, pretty much bigger, right? So right here, minimum 40 points on NQ. So 40 point plus candles, right? For my ES traders, right? I don't know how you guys do it, but no offense to you guys, ES is just a very slow mover. I don't like trading it, right? That's personal preference. You know what I mean? That's out of topic, right? So what we're gonna be doing in this case is going on over to ES. Yeah, size matters. So at least some people think, right? Right. Okay. Anyways. Right. So on ES, right, we're gonna be looking for a 10 plus point candle, right? You guys know ES, the candles aren't as big as NQ because ES is such a smaller stock, pretty much, or index or whatever it is. I don't really know, right? So when you guys are trading ES, you should be looking for anything 10 plus points, right? So you should be looking for 10 plus point candles, right? So how do you measure? Oh, and let me give you guys like a little tip right here, right? Tip, right? So when you guys are trying to find, oh yeah, and yes, NQ does pair with QQQ and ES pairs with SPY. They move the same exact way. So for my futures or for my options traders, if you guys do want to chart this, SPY is ES and NQ is QQQ, right? Okay, now a quick tip here, right? When you guys, okay, when you're measuring the candles, make sure okay, so what is, I'm gonna make this a little bit smaller because this is just huge, right? Okay, so fair value gap cheat code, right? When you guys are trading NQ, anything 40 plus points will be a valid fair value gap because there's enough volume in that candle, so it's a good candle. When you're looking at ES, anything more than 10 points, same case goes, right? Now, when you're looking to measure the candle, right, there's two types of candles. There's either a full body candle, which looks like this, for example. It's like a full box, right? Like, literally a full box, right? Now, the candles that you do not want to be trading, I don't care if they're like 1,000 points, right? 100, could be 100, could be 40, 50, 80 points, right? The candles that you will not be trading are wick candles. Now, I'm sure 99% of people know what a wick is in a candle, but for those that don't, let me explain it to you guys, right? So what is a wick candle? Well, pretty much what a wick candle is it looks like this, right? So, like, most of the candle consists of a buying wick, right? For example, it could look like this, right? Let me see, like this, right? So when a candle looks like this, right, you do not trade it, right? Write this in your notes if you guys are taking notes, which I'm sure you guys are, right? At least I hope so, right? When you guys are looking at these candles, write in a big, you know, big whatever. I don't know how big your guys' handwriting is. Make sure you write, do not trade this, because what this means right here is indecisiveness. What does indecisiveness mean? Well, it means that neither buyers nor sellers are active in this candle. Exactly, it's a dog candle. I mean, it's a horrible candle. You know what I mean? It's useless trading it because there's no direction. This candle is not telling you anything because not buyers nor sellers are strong, right? It's a tug of war. Exactly. Good way to say it. Right? Will you explain the next step after finding fair value gaps? Yeah, of course. Right? I'm just kind of breaking down everything step by step. Right? Okay. So now that we have, of course, now that we know that we should be looking for body candles, right? All you guys will be ideally doing to find a regular fair value gap, right, is simply looking for a retracement into this fair value gap, which will look maybe like this, right? A red candle, whatever, right? And by the way, guys, don't let red candles scare you. Sometimes red candles will tell you the entire story, right? It could be a pullback, it could be a retracement, it could be whatever, right? So when you guys are looking for regular fair value gaps, which I'll show you guys exactly how to trade, right? Usually, off this bullish fair value gap, you think of this range right here as a buying territory, right? This range right here is the most high probability like range where buyers will step in. Why? Because the reason the market is selling off into this range is because it's trying to fill the orders inside of this fair value gap, right? Once these orders are filled, it could be anywhere in this range. It could be up here, it could be in the middle, it could be at the bottom. You know, as long as this fair value gap does not get filled, you're good, right? So let's say, for example, it hits the midpoint, right? It fills most orders to where the market is happy enough to go, back to the direction it was going. In this case, it will be a bullish direction, right? So what's going to end up happening is it retraces into this fair value gap, right? It fills every order and it goes back up, right? This is the easiest explanation of a fair value gap, right? But in today's class, I will not be showing you guys the fair value gap. Although it works and although I trade it, it's not the main focus, right? Because I still need to review the trade for today, right? Okay. Now, what is an inverse fair value gap? You guys might realize right here I said an IFVG. What that stands for is an inverse fair value gap. I'm sure you guys know what inverse means. You're just simply doing the opposite of what it's supposed to do. So instead of the market bouncing off the fair value gap, you're going to be looking for a dump below the fair value gap. Even though it's bullish, I'm going to explain to you guys exactly why, right? So how do you read an inverse fair value gap? How do you know, even though the market looks bullish, how do you know to go shorts? This is where the entire trade recap comes in today. So what I'm going to do is I'm going to delete everything. And before I do anything, right, I'm going to go ahead and screenshot this. Maybe you guys want it, you know, whatever the case may be, right? There you go. Oops. Okay. So, just to, I don't know how to pronounce that word. You said that the fair value gap cannot be filled, right? Yeah, no, if you're looking to play the continuation of the fair value gap, do not let it get filled, right? You need to make sure it bounces off anywhere inside, not outside. It has to be inside of that range, right? So, yeah. Now, it's going to be a little bit different when you're looking for inverses, right? And I'm going to show you guys, it's going to make a lot more sense right now, right? Okay, so here's the picture, right? Now, I'm going to go ahead and delete all of this as we already covered it, right? Now, this is where the actual trade comes in, right? And once again, I really want you guys to be paying attention because it's very important, right? If you guys can understand this, you guys can understand the entire market, right? To inverse, would you wait for a candle close below the inverse? Yeah, I would. Yes, Yogurt. Yes, yes. So I'm going to show you guys exactly what I mean right now, right? So I'm going to go ahead. Let me see. Hold up. So what I'm going to go ahead and do is go into the alert, right? Which is where, dude, this is where it gets exciting. All right, guys. So here, let me go ahead and kind of catch up with the market here, right? So I'm going to go ahead and kind of like replay this back to like the market open, right? So it was right here, right? For example. Okay. So you guys remember what the strategy consists of, right? 4 things: the trend, drawn liquidity, MSS, and inverse fair value gap. My throat got dry. Hold up. Okay. So once again, the 4 things that you need in a strategy is the trend, drawn liquidity, number 3, MSS, and of course number 4, IFEG. Right? These 4 things is what made us over $1,000+ today per trade, right? And I'll show you guys the wins right now, right? So okay, right? So before the market dumped, before the market wanted to go ahead and shit itself, right? What ended up happening? What you're gonna do is you're gonna go ahead and pretty much mark out every single level of drawn liquidity to the upside and to the downside, right? Because of course you guys can't really read the future, right? You guys don't know if the market is gonna be going up or gonna be going down. So the best thing to do is be prepared for either case, right? So how do you prepare for this case? Really easy, right? All you're gonna do is you're simply just gonna mark out every level of liquidity nearby, right? Here, let me go ahead and kind of review this a little bit back here. Okay, here we go. Right, so you're simply just gonna be marking out every level of nearby liquidity, which will look like this, right? So, like I said, when the market is going down, you're gonna be marking out every single high that the market creates, every single pullback, right? So let's go ahead and find it right here, right? So we have some drawn liquidity up here. Why? Because the market pumped up, found this high, and dumped down, right? We have a next level of liquidity. Why? Because the market pumped up, found this high, dumped back down. You guys get the idea here, right? Oops, let me undo that. Okay, so we're going to keep marking out these levels of liquidity as we go on, right? So in this case, you guys might realize that we have, is it 4? Yeah, 4 levels of liquidity. I kind of lost count there, right? Let me see. How big does the candle have to be inside of the fair value gap to show it's continuing in the trend? There's no certain volume. I'll show you in a second, Hubert. It'll make a lot more sense, right? But okay, so in this case, right, we have 4 levels of drawn liquidity to the upside. Right now, we don't know if the market is going to go to the upside, so we need to be prepared if the market goes down. How do you find that? Same way you guys found the upside, right? So what we're going to do here, real time, right? This is what I was doing before the market opened, right? Is we're going to go ahead and mark out every single low, right? You guys might see that we have a double bottom here at 19,504, right? Really easy level, right? As you keep going, and by the way, the higher the time frame, the better the levels, right? Because you guys know on the 5-minute time frame, it's a whole bunch of noise, it's a whole bunch of candles that don't mean, you know, they're not really as useful. So if you guys go on like the 30-minute, the 1 hour, or even the 4-hour time frame, you guys might be able to find drawn liquidity a lot easier. right? So that's what we're gonna do, right? Let's go over to like the 30-minute time frame, for example, right? As you guys see, there's a lot less candles, right? So what you guys are gonna do here is you're simply gonna mark out every level of drawn liquidity to the downside, right? So you're in simple terms, you're just gonna be marking out every bounce that the market has or had as the market is going up, right? So how does that look like? And you guys might see that we have a lot of points here, right? So simply all we're gonna do is we're gonna of course mark out this level, we're gonna mark out this one, we're gonna mark out this one, right? You guys see the pattern, right? Every single bounce of the market or every single wick to the downside the market had while it was going up, you're gonna simply mark that level out as drawn liquidity, right? And I mean, I guess you can keep marking them lower. I think the market went lower today. You can mark out this one and so on. Now, let's say for example, you kind of ran out of levels to mark out to the downside. So how do we find more? In simple terms, you guys simply just start from the higher time frame and go all the way down to the lower time frame. It's that simple, right? So if you guys ran out of levels to mark on the 1 hour time frame, could be on the 30-minute time frame, right? You're gonna move on over to the 15-minute time frame, and as you guys go into the lower time frame, these levels will make a lot more sense because you guys can actually see what ended up happening, right? So remember what I told you guys, as the market was in an uptrend, right? What you're gonna be doing is you're gonna be marking out drawn liquidity as it's going up off every bounce. If you're looking at this right here, right? It's very, very clear that the market is in a clear uptrend, right? I mean, it's steadily going up, right? So what you're gonna do here is with every bounce that the market has, which is this bounce, this one, it could be this one, right? You can have, like I said, there's a million levels of drawn liquidity. It's just, whichever one you mark out, right? You have this one, you have this one, this one. Actually, no, this one's not all that strong, so I'm gonna go ahead and delete this one, right? In simple terms, if you guys want, mark out the lowest point of the red candle, which also works, which you guys can kind of see the pattern, right? Each level that I have marked out is after a red candle, right? Do we keep those levels? Okay, so Muda, which I believe is your name, right? Good question. Do we keep these levels after they play out? No. The reason I say no is because if the liquidity in those levels got filled, it's not valid. It's a random level in the market. You know what I mean? There's no orders there. There's nothing there, so it doesn't make sense to kind of keep it anymore, right? So in this case, you can see the pattern. Every level that I have marked out, it hasn't been tested any more than once or twice, right? So that means it's still valid, right? So in this case, you guys can see right here, right? Each level that I have marked out is a bounce in the market. You guys see it? I mean, it's pretty clear here, right? So what we're gonna do here, right, is after we have drawn liquidity both to the upside and to the downside, all we're gonna be looking for is the bank concept, right, which is where the trade starts coming in, right? So now we have the chart ready for today, right? All we're gonna do is go back into the 5-minute time frame, which is the time frame we trade on, right? After we do this, all we're gonna do is simply just look for a simple sweep in the market, right? So here, let me catch up with the chat right here. Just make sure. Okay, let me see. How many points is a good standard stop loss with this strategy? About 20 points is my go-to stop loss, right? So yeah, 15 to 20 points is my go-to, right? Okay, so let me see. Okay, so let me kind of pull up the commentary here and break down the trade before I explain to you guys exactly what we're looking for, right? So like I said, remember the bank concept. It's very, very important, right? Very important actually, right? So what I'm gonna do here is I'm gonna go ahead and pull up the commentary channel, right? Okay, so today, right, what did we end up reading? Well, at 9:50, right, I went ahead and told everyone, of course, come into market open, and Q is giving us a short-term bullish bias, right? So like I said, I don't do magic, I can't read the future, but even though the market was going up, I kind of knew it was gonna go down, and I'm gonna explain to you guys exactly how you guys can do the same exact thing and impress your parents or your girlfriend or your friend or your boyfriend or whatever it is, your own thing, right? But I'm gonna show you guys exactly how to pretty much be able to tell everyone what the market is going to do before it does anything, right? So in this case, right, like I said, NQ is giving us a short-term bullish bias as, of course, right off open, buyers look really, really strong, right? So I told everyone here, yeah, sure, we might have a short-term bullish bias, but I don't really think the market can go any higher, and here's why, right? So once again, you guys can see it in the screenshot, right? As I said, I don't think the market is going to go any higher. The reason I said this is because, look at this, right? The market is taking out every single level of liquidity. So remember what I told you guys. Every single one bit of level of liquidity that gets taken out is a chance where the market can go ahead and reverse, right? So when the market is near a lot of levels of liquidity, the higher the chances of a reversal is is bound to come in, right? So we can either reverse off this level, it could be this line right here, it could be this one, or it could be this one, or so on, right? Like I said, the more levels there is, the more of a chance the market has to sweep those levels and go to the opposite side. right? So in this case, what we're looking for here is going to be a simple liquidity sweep, which is what I told everyone here, right? So far, buyers are looking extremely strong coming into open, bouncing off this 19,504 level. Now, why is this 504 level so important? Well, keep in mind, guys, right? The market went ahead and bounced off this 504 level 2 times, right? The more bounces the level has, where it doesn't go below the level, right? The more bounces a level has, the more liquidity the level has. The more liquidity, the higher the chance the market is bound to go into that level, right? Because of course, the more bounces, the stronger the magnet is to go into that level, right? Because of course, the more levels of liquidity, right? There's more stop losses, more orders. You guys get the point, right? So that's why I said here, the market is currently bouncing off 504 and going to draw liquidity to the upside at 647, right? So what are we looking for here? I told everyone, well, we actually have a few more levels of drawn liquidity to the upside, so if buyers are still in control, we can expect NQ to go ahead and take out those levels and sweep right back down. That's what I said here, right? I have a few more levels. Of course, if NQ buyers are still in control, which of course they were really strong, right? We can expect them to take out the levels before we see the sell-off, right? Because of course, if we have levels to the upside, it's playing like a magnet in the market, right? So if there's a magnet in the market, what ends up happening? Well, price is going to go into those levels, right? It's going to fill all those orders and it's going to go back down, right? Giving us the MSS model, right? So that's what I say here before we see some selling. I wasn't guaranteeing you guys that we're going to see selling. It was just a high chance, right? And this goes for an everyday type of market, right? And of course, I'm sure you guys have been here in the previous classes. You guys know how it goes, right? But okay, right? There's a chance that NQ could sweep liquidity around this range and form an MSS back down. I already showed you guys why it's bound to do that, right? So I'm not going to explain myself again, right? So if it's a big if. I'm not saying it will. I'm saying if, right? If NQ does form an MSS model, NQ also has this 5-minute bullish fair value gap that we can look to inverse back down into drawn liquidity at 504. Remember the level I told you at 504 as the magnet right here, right? So why are we looking to inverse? Even though the market is going up, we have a bullish fair value gap and buyers look strong. Why are we looking to do the complete opposite of literally everything, right? Of the bullish fair value gap, of the trend, of the buyers, of everything. Well, let me show you guys, right? So if I replay this candle, right, you guys will see that the market ended up pushing up, which will be in some time right here, right? So what ended up happening here? Well, let's go ahead and figure it out, right? So you guys remember how I told you, right? NQ should have at least 40 points into the candle. And here, let me open up the chat just in case you guys have some questions, right? Just in case. More bounces? Yeah, exactly, right? So what we're looking for in this case is, first of all, we need to make sure that the candle is a valid fair value gap. Let me show you guys real time how to find it out, right? So on TradingView, what you're going to do is you're going to go ahead and click on the measuring tool, right? Click on this little ruler thing right here, right? You measure it from the complete bottom. Yes, wicks included. Yes, wicks included, right? You measure it from the complete bottom to the top. You guys can see this candle is 2 times as valid. It's an 80-point candle, right? How many points do you recommend there to be on for ES? 10 points. 10 points. 10 or more, right? Do you work with candlestick confirmations? And is it always a 5-minute time frame? Yeah. So not really okay, yeah, candlestick confirmations when it comes to candle closes, right? And yes, I only trade off the 5-minute time frame. I never use the 1 minute. That is like out of the picture, right? I really don't like the 1 minute, right? But okay, right? So what we're gonna do in this case is, since now that we know that this candle is more than 40 points, it's actually double the 40 points, right? What we're going to do is, we know that this is the valid fair value gap. So what we're going to do in this case is we're going to go ahead and mark it out. Remember how I told you guys? Let me go ahead and do this real quick. We're going to go ahead and mark out the fair value gap, which is going to look exactly like this, right? Like I said, in a bullish trend or in a bullish fair value gap, you're going to mark out the top of the first candle and the bottom of the third candle, right? So it's going to look like this. Now you have a massive gap in the market, right? So what I told everyone here in the Discord, right? Let me go ahead and put it up. Right, is of course I'm expecting price to go ahead and try to inverse this bullish fair value gap. Now you might be asking, well, the market is still bullish, right? We're holding this bullish fair value gap, so why are you still bearish? Well, just because we're holding the fair value gap once does not mean the market will go up forever, right? Maybe buyers are still in control. Keep that in mind, right? So simply all we're looking for here is waiting for an MSS model, right? So how do we look for that? Well, now we know that drawn liquidity got taken out, right? Which is going to be at 646 and 662, right? We know that drawn liquidity got taken out because, I mean, keep this in mind, right? The price went above this level, and currently price is getting rejected. Keep in mind, we have one rejection right here. We have a sell-off, which counts as another rejection, and the price moved up into this fair value gap, or this level of liquidity again, and of course got swept back down, showing you guys 3 levels of rejections. Now, what did I tell you guys? the more bounces or the more rejections the market has off a certain level, the more likely it is to go throughout that direction. So, although buyers did look strong, and we have a bullish fair value gap holding us up, the market is getting rejected off these levels of liquidity, meaning that buyers aren't interested anymore. Why are they not interested? Because the magnet concept, keep that in mind, the magnet already got filled, right? The drawn liquidity, pretty much, right? So the magnet moved the price into these levels, right? It filled these levels. Once it got filled, the buyers are not interested since all of the liquidity got filled, right? Or the algorithm is not interested. Keep that in mind, right? So what ends up happening is, now that drawn liquidity is not, buyers aren't as interested to the upside anymore. What ends up happening? Well, when the market was going up, it created drawn liquidity to the downside, right? Happens in any sort of trend. So what ends up happening is, as the market was going up, we created a level of liquidity at 504. Remember how I told you guys we're looking at that level, right? So this is what we ended up forming right here, this level of liquidity. So now we know that the market, that sellers are trying to step up here in the market, right? But we're being held up by this bullish fair value gap. How do we enter this? You might be asking. Well, guys, it's so easy, right? You simply just do the opposite of what the market is being held up by, right? So in this case, the market is being held up by this bullish fair value gap. So what we're going to be looking for is going to be a simple break below the fair value gap, right? So you guys are going to be looking for a break below this gap right here, right? At 569. Right, so the way this would look like would be, ideally you enter shorts off the breakout and you simply target drawn liquidity. Of course, if the market goes any lower, you could target more drawn liquidity and so on, right? So you guys remember all the levels of liquidity that we marked out as we were going on, right? Keep that in mind. Keep that in mind. Remember, 15-minute time frame, 30-minute time frame, 1 hour time frame. We found all these levels of liquidity to the downside, right? The reason this is so important, right, is because when the market is going your direction, let's say you're in a trade or whatever, right, you're going to be using these levels of liquidity as your price targets. Why will you be using these levels of liquidity as your price targets? Because if one level gets hit, you guys need to make sure you guys take some sort of profit, because you remember, guys, every level of liquidity that gets hit, you're running the risk of the market reversing back to the upside, right? Because as the market was going down, it's a level of liquidity, is creating liquidity to the upside. So if it fills that level of liquidity to the downside, what ends up happening is buyers are more interested in filling the ones from the upside. So what ends up happening is the market reverses back up, right? And it's a pattern. It happens every single day, up, down, every single day, right? Let me catch up with the chat here, right? Why don't buyers continue taking out the other levels of liquidity that you marked above? Because like I said, right, it's not guaranteed that we're going to keep going higher, but it's also not guaranteed that the market is going to sweep. So in the market, of course, you can't predict the future. You need to be ready for whatever comes along, right? And that's why I told you guys, we could go higher. I didn't give you guys a specific level, but I did tell you guys we could go higher until we fill every level of liquidity, and eventually the market is bound to go back down, and that's what I'm expecting. Once we get that expectation, we're ready to go ahead and take the trade, right? Let me see. How many levels of liquidity does the market have to sweep? There's no certain levels. There's no certain level. Like I said, you just need to be prepared for any level to be ready to go ahead and sweep the level. Right, so make sure of that, right? Okay, so now we know exactly what to target if the market goes down, right? We need to find the entry point. The entry point will be based off your inverse fair value gap, which is the cherry on top of the strategy, right? So what you're going to be doing here is you're going to go ahead and this inverse right here would be your ideal entry point, right? So I'm going to type here ideal entry point, right? So how would this look like? Let me show you guys, right? So let's go ahead and pull up the alert once again, right? And before I do, let me kind of catch up with the setup, right? As the market was sweeping, right, and as sellers are stepping in, you guys can see right here real time, I went ahead and told everyone, looking at NQ after this commentary, it seems like sellers are finally stepping in and trying, not they're trying to form an MSS off the drawn liquidity at 662, right? You guys remember, we have the drawn liquidity at 662 right here at this high. Right, so we know exactly where the market is going down, right? And you guys should be able to understand it too, right? So right here, this is why I told everyone, yeah, this is the setup we're watching, right? So coming into the 5-minute time frame, simply all we're looking for is going to be, of course, if NQ is holding up this 5-minute bullish fair value gap, and we know that sellers are stepping in, right? We know that buyers aren't strong enough to continue holding this fair value gap, right? So keep in mind, a bullish fair value gap is a buying territory. If buyers can't hold this territory, sellers are going to take control. If sellers take control, we're going to go lower, right? It's that simple, right? So that's what I told you guys here. NQ is still holding up this 5-minute bullish fair value gap. So all we're looking for here is going to be a simple inverse below this fair value gap and look to take shorts into drawn liquidity at 504. Why we're looking at 504? Main reason being is because it's a very respected level of liquidity, right? Keep in mind, guys, the more bounces the level has, the stronger the magnet is into that level, right? So that's why we were looking at 504. It's a double bottom right here. Double bottom means more liquidity, more volume, more everything, right? So it's a higher chance of the market going down into that level, right? Are you guys only trading NQ? No, I trade NQ and ES. I just trade NQ a lot more, right? But yeah, okay. So once we have this commentary out of the way, all we need now is for the market to go ahead and sell off, right? So how would that look like? Like this. Boom. Perfect. Right? So what you're going to do here, ideally, right? Here's where I kind of messed up today, right? As you guys may know, we got stopped out at the first entry and we ended up hitting a 650 point trade after the second entry, right? So we had 2 entry points, right? The first one, we had all the confirmations. The only thing we were missing here, and guys, keep this in mind. The only thing we were missing here in this in this trade is the stop loss was not formed yet. I myself got a little bit impatient because selling was coming in strong. My bias was coming in strong and the setup was playing out, right? But keep this in mind, guys. If you guys don't have an entry point, if you guys don't have a price target or a stop loss, right, the trade is not ready. You guys don't have the game plan, right? You guys need to make sure you have those 3 key aspects. Why? Because if the trade goes against you, you'll freak out. You won't know exactly where to get out. If the trade goes your way, you might sell too early or you might sell too late where the trade reverses against you, which is why you use price targets. Now, if the trade is playing out in your favor, you need to make sure you guys know where to enter to get the most profits and risk the less amount of money, right? In this case, right, ideally, everything lined up perfectly. The only thing missing is the stop loss, right? You guys might realize, hey, like, if you entered at the break, you're risking 50 points. You know what I mean? And I myself, I'm not going to be risking 50 points. That's the last thing I'm trying to do, right? So, of course, I told everyone, I'm going to go ahead and enter shorts here, right? Which is where the alert comes in, or the first alert at least, right? Which will be right here, right? You guys, let me go ahead and scroll up to all these alerts. It'll be right here, right? So you guys might realize, I went ahead and entered shorts at 19,565, which will be right around 565, right here. Right, so I'm looking to risk 55 points, which is not something I'm trying to do. Right, so my stop loss is not going to be here. Right, ideally, the most I risk usually is about 20 to 25 points max, nothing more. Right, so I'm like, you know what? Since we don't have a stop loss and the trade is going our way, I highly doubt the trade is going to go up 25 points from this rejection. So I'm going to have my a random level just for now at this stop loss. Right, so my stop loss was placed at 591. Right, so it was just barely above like this, like 591, right? So about 26 points, right? I mean, to me, this looks like a pretty good trade, right? Right? Well, I mean, we're looking to risk 26 points to make about 60 points, right? Which results in a 2-to-1 risk reward. And of course, if the trade goes any lower, so will the risk reward, it will increase as it goes on, right? Although the setup looks so good, right? We kind of messed up on the entry since we didn't have a guaranteed stop loss. We set our stop loss at a random level, right? Of course, if price goes up, it's not going to reject off that random level. It's going to reject where the market rejected from, right? Which is where we place our stop loss. So ideally, if we would have gotten a better entry, I would set my stop loss at where the market rejected from, which would be at this candle wick up here. But I'm not looking to risk 55 points. That's the last thing I'm doing, right? So what I told everyone is, sure, I'm going to go ahead and enter here. I do really like the trade, and I'm confident. For those that were in my live trading today, you guys remember me saying it word for word. I'm like, guys, I am confident in this trade. I do think we're going to go lower. Our stop loss is just kind of out of the picture right now, right? So either we miss the entry in the complete trade, or we just risk it and just use a random stop loss, right? Trust me, guys, if I would have missed a 650 point trade today, I would not be here right now. I'll actually be crying in my room, right? So I'd rather get stopped out at first and, whatever, rather than missing the entire trade, right? So I took a little bit of a risk here, but honestly, I'm down for it. I don't really mind too much, right? So what ended up happening is, unfortunately, we got stopped out, right? We had a 26 point stop loss. This ripped through our stop loss. Main reason being is because we didn't have our stop loss set at a certain level, right? Keep in mind, the market rejected off this high up here, or nearby this high right here, right? Which is what I expected it to happen, right? But I'm not trying to put my stop loss all the way up there just in case the trade goes against me, right? I will lose my entire account, right? So I'm like, you know what? I'll have a 27, 26 point stop loss, whatever it is. And if it goes against us, I'll just re-enter when we get an actual stop loss, right? So when did we get an actual stop loss, and why did you re-enter? Well, like I said, the trade was still valid, right? We never hit the stop loss. Keep that in mind. The main stop loss was up here, right? This fair value gap never got invalidated, right? So as you go on with the trade, right, you guys can see that the market finally ended up dumping down as we expected, right? So what I did here is I simply waited for another break below the fair value gap, and I finally entered once again. I entered at, let me try to find it. I entered at 19,556.50, right? So it'll be right here. So 556. So I entered right here at this candle low right here, right? Now that I know exactly where my stop loss will be placed at, now I'm kind of in a lot more of a calm mood. You know what I mean? So I'm gonna go ahead and place my stop loss at the high. You guys might realize it's 28 points. I usually don't break my rules like this, but I'm like, you know what? I'm confident it's gonna go down, so I'm gonna take the risk and use a 28 point stop loss. I don't suggest you guys do this. But if you guys, whenever you guys are confident in the trade, you gotta do what you gotta do, right? I couldn't find a better stop loss, so my main stop loss was gonna be placed at the most recent high, which is gonna be set right here at 19,584.25, right? Now, when we went ahead and entered, the rest is history from there on out, right? So once again, guys, where's the model? Where's the model? Right here, right? So let's kind of catch up here before we watch the trade go in our favor, right? We know what the trend is, which of course was a bullish trend, right? We know what drawn liquidity is, which was up here. We got the MSS of drawn liquidity up here. Market reversed, and then we got an inverse fair value gap off this right here, which is why we got the entry. Then we used our drawn liquidity as the price targets, which we marked out before we took the trade, right? So our price target will be down here, down here, down here, down here, and if the trade wants to go lower, so be it. Where was your live trading? Okay, so here I'm gonna go ahead and send you the link right here. I'm not gonna say it in the Discord because I'm not trying to self-promote, but I will put it in my YouTube because of course it's my YouTube, right? So yeah, Scott, if you want to go ahead and get access to the live trading, the link is right there. Like I said, I'm not gonna put it out in the Discord because I'm not trying to self-promote, right? But anyways, now you guys are kind of caught up with the strategy and all that stuff, right? So long story short, what ended up happening? Well, watch this, guys. Watch this. All of our price targets got smacked for guys. Look at me right here in the camera from my YouTube. 650 points. 650. Guys, I have never had such a bigger trade in my life, right? In my whole entire trading career. And you guys can see it all happen right here in front of your eyes. So we re-entered NQ. We hit 25 points, 60 points, 90 points, 135, and you guys get the idea. We kept going and going and going. Long story short, we ended up getting a 650 point trade. How much money is that? Let's do the math. Let's do the math, right? So for those that are curious, for those that are pocket watching, whatever the case may be, right? Let's go ahead and check, right? So let's say, for example, the usual contract size that you guys usually trade is about 1 to 2 minis, right? So I'm going to go ahead and put 1 mini on the trade. 1 mini is all it took, right? We caught a 6, so let's say, for example, right? So 1 mini, right? And Q. With 1 mini, you would have made 1 mini, guys. 1 mini. One. You would have made $13,000 today. With one contract, guys. With one contract. 1 mini. $13,000 with one trade. You know how crazy that is? You know how absolutely crazy that is? But here, let me go ahead and catch up here with the chat. In the meantime, did I have a runner the whole way? No, I had my runner till 200 points. And I'm like, you know what, guys? This trade is too good. I'm happy where it's at. I'm going to go ahead and take full profits here. But the reason I said it was 650 is because some of you guys are crazy as hell and you guys held that trade till 650. Beam, if you're in here, one of my members, bro, you have some like literal diamond balls, bro. I don't know how the hell you held that, but congrats to you. You know what I mean? Yeah, for real. But I ended up taking my full profit at 200 points, right? But yeah, so long story short, guys, this is my entire inverse fair value gap model that I use on a day-to-day basis. You guys can see my all my pretty much. Oh, let me show you guys the wins. Matter of fact, right? I have wins on pretty much everywhere. I have some here. You guys can see $1,000. O'Reilly, huge shout out to you, bro. $2,000 to Nemo, huge shout out to you. Kerr, I can't do math. I think it's like I'm gonna do like 800 maybe. Yeah, I'm gonna do 800. Huge shout out to you. How much is 1 mini? 1 mini is $1,000. So if you're trading on a live account, it's $1,000, right? Let's keep seeing some more wins. I'm pretty sure JC ended up making 450 off the trade. My boy, I'm not gonna mispronounce that, so I'm not even gonna bother saying your name, but you know who you are. You made 1.4k, $800 to Miguel. Huge shout out to him. You still owe me that 1v1 on Fort. You know what I mean? O'Reilly once again, and so on, right? And let me check out some wins from here, right? Because I got Diamond Moss is crazy. I mean, come on, let's be real here. Who the hell is holding a 650 point trade? You know what I mean? That's actually crazy. I would never do that in my life, right? Do you have a funded or a live account? I have both, and the platform that I suggest using is gonna be this one right here. 1 second. Let me see. It'll be this platform right here. I'm going to delete that, everyone. Okay, here you go. So Muda. There you go. Let me press it again. There you go. Okay. So yeah, guys. Now you guys pretty much saw all the wins from today. I'm not gonna lie. I am okay. Before you guys, like, of course, anything happens, do not expect these trades to happen every day. This is like, I promise you guys, I am not expecting such a big trade like this possibly in a while. Right? Of course, lately we've been absolutely crushing it. You guys have been seeing 80-point trades every day, 100-point trades every day. Let me kind of humble myself first and foremost, and you guys as well. Do not expect 80-point trades every single day. I know we've been killing it lately, but we're just on a simple winning streak, right? Which, God bless, thank you God for everything. But it's not always like this. Some days there will be losing trades. Some days there will be 15 to 20-point trades, right? You guys need to keep in mind the compounding of the wins, right? Keep that in mind, guys, please, right? Bro, Sim, 80 points tomorrow. I'm going to try my best. Right? Does liquidity also work when buying longs? Yeah. Liquidity is longs and shorts, right? This is futures. Yes, it is. And by the way, guys. If you guys like a quick, whatever here. Let me see. Okay, right here. Yeah, even 20 points a day is more than enough, guys. 20 points a day is like a few $100s, right? So last thing I want to tell you guys is to be greedy. That's the worst thing you could do here, right? But before I do anything, or if you guys do want the recording or want my previous classes or you guys want access to my live trading, it's all on my YouTube. So if you guys, of course, want to go ahead and check it out, feel free to show some love. You know what I mean? It means a lot to me for, of course, showing you guys, teaching you guys, taking time out of my day to, of course, teach you guys. Feel free to subscribe. I'm trying to get to 1,000 subscribers, which will be amazing. I'm gonna do a huge giveaway, a huge celebration. But yeah, if you guys, of course, want to check it out, all my classes are here, of course, everything. And I'm gonna change all these titles and kind of fix them a little bit. But yeah, now let me see right here. Here, so Paid Assassin. Let me see. Hold up. Let me see. Okay, there you go. Okay. Now in the meantime, now that we finished, do I live trade every day? Yes, sir. I trade every single day on live. I didn't today because I wasn't at my setup. I had to go help my mom out with something, so I was just trading on the go. But I mean, you guys saw how I resulted, right? And if you guys want to watch how my live trades go, I mean, you can watch them all right here. You can get the testimonials. I mean, you can probably see one like right here, right? I think I ended up catching a good trade here. Let me see. You guys can see when I entered right here. Okay, let me show you guys exactly how the live trade go, right? Before you guys leave or whatever. Here, look. So we ended up entering right here. See? Right here. You guys heard it. I entered at 302, right? Let's fast forward this trade a little bit. Boom. Price target hit. I think we got stopped out there, but price target hit. You see what I mean? So if you guys want access to these live trades and all that good stuff, it's always going to be on my YouTube and all that stuff, right? Are these videos good for beginners? I'm trying to get into this. 100%, man. Yeah, 100%. Yeah, you could use this to begin. You could use this to become an expert or whatever. Yes, it will help you out for beginners, intermediate, or advanced or expert. I don't know what the terms is, right? But yeah, and thank you for the heads up, Zero, or for that vouch, bro. Thank you. It really means a lot. Is Tradevate for trading? Yes, it is. Yeah. I use Tradevate as well. Here, let me go ahead and see because I have a mention right here. Okay. But yeah, now that I finished the class and I pretty much gave you guys not the secret sauce, but I told you guys, do I execute on my phone or my desktop? I use my computer always. I don't like using my phone. The computer is so much easier to use. I have two monitors, so I live trade my screen here for those watching on my YouTube, and I screen share right here or trade on my second monitor. Is Fidelity alright? I believe so. Yeah, I do think it's a pretty good broker. Let me see. If so, how much should I start with on a cash account? Minimum $500. You can, of course, take it out how you want it, but minimum 500. You can do 1,000. You can do 10,000. I don't know how much money you have. I'm not trying to pocket watch, but you get the case, right? Anything more than 500, you'll be set. But yeah. So I'm actually surprised a lot of you guys ended up staying throughout the end of the class, which was about 80 or so people. So I guess me being a little bit strict with you guys, you know what I mean? It worked, right? So I'm glad for that, right? So I'm glad I was able to give you guys some knowledge behind my trades, behind my strategy, and all that stuff. Thank you. I got you, James. I got you. Now, before I end this class, which has been about almost 2 hours or an hour and a half or so, what's it called? Do you guys have any questions? Do you guys have any questions? And once again, guys, if you guys want to show some love, feel free to check out my YouTube and all that good stuff. But yeah, great class. You were born to do this. Thank you, man. Yeah, I mean, I've been doing this since I was 15. So yeah, definitely something that I grew up on, you know? Thank you guys. Thank you. And if you guys don't have any more questions, I mean, we can call it a class. Check DMs when you're free. I'll do it right now. How do you prepare orders? Let me see. I think I have a class for that. Hold up. Let me give you the YouTube link for that. 1 second. Let me go ahead and find it right here. Give me a second. Let me see. And of course, you guys can see everything right here. Hold up. Right here. So it'll be right here. How do you prepare orders? Right here. Okay. So $500. Let me see. $500 on a cash account allows me to trade a mini. No, one mini is $1,000. So you need $1,000 in your account. $500 is for 5 micros, which is half of a mini. So yeah, good live. I'll see y'all tomorrow. Yogurt, bro, have a blessed one, bro. Stay safe. Do you like trading Top Step for? No, I use Apex. I don't really like Top Step too much. I'm not saying it's bad. I just don't like it myself. You said you trade on live or on YouTube. I do both. Braden. But if you want to find the testimonials behind everything, it'll be right here. Okay. Would it be more profitable to trade futures with your setups and others? Yeah. If you're gonna trade my alerts, I would say do it on futures over options. You guys know I do not like options. I used to do options for about 3 years. Not my cup of tea. Right? Main reason I say this is because theta is a pain in the ass. I mean, to be real, you guys know what I mean, right? Theta really ruins those contracts, even if it goes your way, and I hate that, right? So that's why I switched to full-time trading futures, or trading futures full-time. Have a good one. I'll see you tomorrow. No worries, bro. Thanks, man, for this information. No worries, guys. No worries. Alright? But alright, guys, I'm going to go ahead and call it a class because I have to go to the gym. People are waiting for me. You know what I mean? So, yeah. Alright, guys, I'm going to go ahead and call it a class. It was an amazing class. I'm going to go ahead and post this class live, like the whole recording, and all that good stuff. How long trading hours? I trade for about 8 hours a day, usually. So, yeah. I mean, I know it sounds like a lot, but, you know, every day is different. Some days is like 5 minutes. Some days an hour. Some days is the whole day. Right? See you tomorrow, bro, on another 500-point win. I'll try. Just subscribe to the YouTube. Thank you, bro. Thank you. God bless, man. Okay, guys, I'm going to go ahead and call it a class for today. And I will hopefully see you guys tomorrow. If not, next week. Alright, guys, take it easy. Have a good one, guys. Peace out. I'll post the class recording right now, by the way. Alright, guys, peace. Take it easy, guys. Take it easy.